Inox Wind, the big wealth creator of last year, has come out with their results, and I have with me Devansh Jain, ED of Inox Wind, to talk more about the numbers. Devansh, good to speak with you after a long time. Uh, Before we come to numbers and specifics of the company, as we were chatting earlier, you've been traveling across the world. You must have met with a lot of experts. When we speak to companies across value chain in the power space, every time we speak to any large wires and cable company or any transformer or any power ancillary company, one is getting a sense that it is not just India. India, of course, is a beneficiary of a lot of reform work, but globally there are a lot of activities happening. Since you've just come back from a very extensive traveling overseas, what exactly is happening in the world in power transition in the energy space?
Hi, good afternoon, Ajay. Good to be back with you after a while. Yes, I've been traveling extensively. In fact, just a couple of days ago, I was at the World Economic Forum in Riyadh as well, where it was more about collaboration and new energy development. So, while of course in India, energy transition and power is huge, but globally, I think there's a huge thrust towards energy transition, which encompasses a lot to do on renewables. In fact, I was surprised there was a lot of discussion on nuclear as well. There was a lot of discussion on electric vehicles. Uh, so I think globally, I think two topics which have become really hot. One is obviously artificial intelligence, and to some extent what Chat GPT and some of these people did. And the other piece where there's a lot of excitement. Given the fact that there's a huge amount of money which can be poured in is energy transition. So the Middle East, like I mentioned, I was in Riyadh. The Middle East has, putting aside the fossil fuel, the fact that they generate this massive amount of fossil fuel and supply to the world, but there's huge transition and huge investments taking place. I met a lot of global investors. I met a lot of almost 40 to 50 energy CEOs globally, and the kind of enthusiasm and excitement there is on the kind of money which is going to come into renewables, battery storage, is just mind-boggling.
Interesting, very good. Yeah, I mean, I think you're also talking about uh, Aramco, which is Saudi's biggest company. I mean, they may be in fossil fuel, but their incremental capex, all the incremental capex are actually happening towards new energy. But coming back to your company, you too have completed 3 megawatt now as far as the transition is concerned. And we are at the cusp of starting of the new financial year FY25. What exactly are you planning or aiming in the new fiscal?
Look, I think this year has been a milestone turnaround year for us. After the whole 5 years of very painful, transition from feed-in tariffs to auctions, I think as many people will be aware and you're aware, there have only been one or two survivors. We're very, very excited, very, very happy that a lot of the effort which we've put in over the past 12 months has come to fruit. We've used this period to fix the balance sheet, pare down debt drastically. We're at the cusp of becoming virtually net debt free over the course of the next few months. We've publicly said over H1, we intend and expect to become net debt free. We've spent a lot of time rebuilding the management team, getting the supply chain ready. It sounds easy, but it's a lot of effort which has gone in, after a 5 year slumber to get the whole supply chain, global suppliers ready for the massive execution. And we're not talking of 100, 200 megawatts. We're talking of 800, 1,000, 2,000 megawatts being supplied over the next 1, 2, 3 years. I think what we've also done is we've spent a lot of time on the technology side. We've completely transitioned from our 2 megawatt product, which was kind of now done and over with, outdated, if I may say so, to our 3.3 megawatt turbine. The last quarter was the first quarter where we've substantially increased supplies. So that was actually the first quarter where we started virtually supplying, and almost 70-75% of supplies last quarter was 3. In fact, it was higher than what we'd estimated, even higher than what we told the markets. To some extent, the markets, I think, believe that we would do more in terms of volume, given we were going to do 2 megawatt. But that was not relevant for us because we are focused more on profitable growth and profitability as opposed to just supplying turbines for the sake of supplying turbines. I think as I sit back and I look at, we're starting the new financial year. I think what we are what we are very, very excited about and what we are very clearly focused on is substantial profitability. I think in the quarter which went by, I think we've demonstrated very strong EBITDA, very strong EBITDA margins. We have guided for 14 to 15% EBITDA margins on a rolling basis, in a full year basis. And I think given the huge ramp up which we're expecting, I think we're very, very confident and comfortable with what we've spoken about. If you notice what we've done in the financial year which went by, we've really scaled up supplies by almost 3 to 4x. So we've gone from roughly 100 odd megawatts to roughly 400 odd megawatts. And what we've guided for is about 800 megawatts, going up to 1200, 800 in the coming financial year, and then 1200. So that's also a doubler. And again, this is all 3 megawatts. So effectively, with a 14 to 15% EBIT target, which we've guided for, which we've publicly stated, I think we're looking at very, very strong profitability. Again, this is again backed by substantial free cash flows. I think we've got a lot of the working capital already invested in the system, and I think on the order book side also, I think there's a huge movement. So from last year, when we had about 600 megawatts of firm orders, we're now at almost 2,700 megawatts of firm orders. So I think that's how we're looking at things.
Absolutely. You're sounding pretty positive, Devansh. The shareholders are joining in the conversation, and you did allude to the fact that you're expecting a substantial profit in this year itself, that's FY25. Any number that you can put to it? What sort of a top-line guidance do you have going ahead? And yes, you did touch upon the fact that you are aiming to be debt-free, actually net debt-free, in a couple of months. So H1 FY25 would be an apt timeline, or much before that?
Look, I think I believe we've been communicating very transparently with the market, and I believe that we're being conservative and we're achieving things prior to what we're saying. So I would like to say that our target really is H1, where we intend to become net debt free. Let me remind you, we've come down from virtually 2,800 or 3,000 odd crores of interest-bearing debt and advances now to about 650 odd crores in the past 12 to 15 months. So it's a complete turnaround on the balance sheet side. The other question was with respect to revenue, and I think it's a broad thumb rule that you go by 6 crores per megawatt. Of course, when we sell turnkey projects, that's really 8 crores a megawatt. But having said that, virtually 50% of what we're doing now is equipment supply. So blended, I think 6 crores per megawatt is a fair number to assume. And I think it's not rocket science putting together the guidance and the math to get to what kind of revenues and profitability we're looking at.
Excellent. No, you're right. I mean, you've been speaking very clearly to the market. Market was a bit late in realizing it. And then there was a massive FOMO in your stock price, of course. Let's talk about your margins. Pretty high this quarter. Where do you expect normalized margins to be? If you could talk a little more specifics, and also the visibility on order inflow pipeline in the new year.
So Ajay, I think we've stated this earlier as well, and I'll reiterate. We're looking at about 14 to 15% EBIT margin. I mean, it's virtually going back to what our numbers used to be prior to the sector shutdown until 2017, where from 10 until 17, we were roughly at 14 to 15% EBIT margin. You'll have quarterly ups and downs. You could have some nacelles being shipped out, blades coming later, or you could have some higher margin supply or some quarter commissioning kicking in. But broadly, 14 to 15% is what we're guiding for, and I think we're very comfortable with that number.
And how do you see the tendering activity in wind and hybrid space? You guys must be participating too. Are there some delays because of elections, or that is part of the game?
No, I think just coming back to the order book question, we've really gone from about 600 odd megawatts of firm orders last March to now about 2,700 odd megawatts of orders. Now, what we've also publicly stated is we intend to do about 800 megawatts in FY25 and 1,200 megawatts in FY26. So if you look at it, my order book today is 2,700 odd megawatts, which is virtually about 18,000 crores worth of revenues. I'm already tied up for the next 2 years in terms of what we've publicly stated. And again, the longest lead time you get to execute an order is about 2 years. That's PSU tenders. Private sector gives you about 15 odd months. PSU gives you about 24 months. And then you've got the retail captive market, which is about 6 months. So frankly speaking, we have a very, very large order book, probably the largest or the second largest in the entire sector. And I'm talking of firm order book. I'm not talking of LOIs and MOUs and so on and so forth. Secondly, within which we've bid out in multiple PSU tenders. There are multiple C&I and IPP negotiations going on as we speak. I think, I mean, we can take as much as we want. I think orders are the least of our issues. And I think with such a large order book, it's not that I can create a 5-year order book here. I mean, you can at best be 2.5 years. That's the longest you can be. You can't create an order book larger than that. So I think we are continuously upgrading our volume guidances. I think we spoke of 500 for 25. We upgraded that to 600 megawatts. And then we upgraded that further to 800 megawatts. So I think, honestly, every month, as we look at our business plans internally, we're kind of upping because the demand is just unparalleled.
I mean, that is, I mean, the business momentum and the way you guys are sailing through it is clearly visible. Your confidence is oozing out in way of smiles. But good luck executing those. You're going to be very busy next few years, of course, right in the middle of the energy transition company, which is a massive turnaround. And now, of course, the growth trajectory. Thanks very much for your time, Devansh, this afternoon as well.
Thank you.
That's Inox Wind for you. We'll take a short.
If you like this video, then like, share and subscribe to ET Now.